Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Jack Devine is founder of the Arkin Group and is just definitive on the arc of our CIA, away from the movies, away from all the different silliness as well. And in fact, some would say he was actually a character taken by Philip Seymour Hoffman long ago. Jack Devine, because of limited time, and questions are so important here, my memory is our colossal misguess on the intelligence of the Soviet Union. Do we have quality intelligence on Iran?
Well, I hope so. Let me put it that way. We're at that point where push comes to shove. There's no doubt in my mind that we have great technical coverage. I also believe we have a force multiplier in Israel. Israel has fantastic intelligence collection on Iran. There's no doubt about it. And I therefore think that we're well positioned to deal with the situation because of that intelligence. And they've shared it amply because it's in their interest and our interest. So I think we're square on this one. This is not I don't see it. There are opportunities for mistakes on this, for sure, but it won't be because they don't have good intelligence.
There's great discussion of the linkage of the Pentagon to the White House and the White House to the Pentagon. Do you perceive a good use of our CIA intelligence by President Trump?
This is a controversial issue today because Tulsi Gabbard in March went down the hill and said that the Iranians did not have a nuclear weapon and it was 3 years before they could deliver it. And that was raised with President Trump yesterday, and he said he's really not counting on that information. And so therefore, I think there is a disconnect. And I guess I would have a cautionary note for political leaders. And that is, if you have a choice between the intelligence community that says we're going to give you nothing but the truth, and you have political leaders in other countries who have a vested interest in presenting facts in a particular way, I would recommend you stick close to those intelligence estimates. So having said that, there are subset issues in this that I could touch on, which is, for example, we have to be careful in defense of Netanyahu's presentation of the situation that it's not underestimated. You cannot get this wrong and say that it's not a dangerous situation. And I would add to that I think we spend a lot of time thinking about, they won't be able to deliver by a missile, and that's what pushes it out a few years. And I think we need to step back and realize that's not the only way that nuclear weapons can be detonated and can be dangerous. So there's an enrichment point. And once it gets that enrichment point, then the starting gate's open. Yep. You have to take care of it.
Jack, if the U.S. does get involved here militarily, how do you think the Iranians will respond?
I would not want to be in the Iranian leadership's position. It's like the featherweight fighter getting in with the heavyweight champion of the world and have never had a fight. And I think that's what you're looking at. And you can dance around the ring and jump up in the ropes, and you're going to get knocked out and carried out of the ring in the first round. How do you defend yourself if you have no air defense? I mean, if there is no way to prevent your adversary, and that would be, in this case, Israel and ourselves, this thing can only end one way. And I think the Ayatollahs have a great struggle with it, and that is the President of the United States is saying unconditional surrender. That has very specific meanings. And I think that's where we are. And I think for the Iranians, the counterpunch, they might get one in, but all hell will break loose after that. They have nothing to stop the U.S. from flattening Israel without using nuclear weapons, just flattening it. They have no defense. So I think they may turn out to be a little more prudent than they're hopeful, more prudent than their verbiage.
Jack, I guess one of the initial talking points is the Fordow nuclear site deeply buried under the ground. Does the U.S. have the ordinance to take that out?
I think all the experts have been practicing this for years. I shouldn't say tens of years, but I mean, you certainly over the last decade, they've been developing the GBU 57, and that has the capacity of, but not a single shot. This is going to take multiple shots at Fordo to destroy it. But I think we have the capability. Unfortunately, we are the only ones that have it, and we have the one platform, the B2, that can deliver it. So I think if I were sitting in Tehran, I would say goodbye Fordo. Okay, I think that's where we are. It's going, and it's not going to be pretty. I think it's the only alternative. I think I've read that, and I know I've read, but that the Israelis believe that there's other alternatives. Right. And if there were, I think we would have said, why don't you use them? I think it's either this or you let them keep developing nuclear weapons. So I think we're looking at the end game here.
Jack, very importantly, time for one more question. We'd love to get you on in the coming days and really appreciate your public service for over 50 years to the CIA. We had on the Crown Prince in exile, the son of the Shah yesterday. This made global headlines. Thank you, Danny Berger and Lisa Abramowitz, for that. What does, you have talked about a partition of Iran, a partition of Iraq. What happens to the greater Persia if this all falls apart? Is it every big nation for themselves?
Well, to some degree, we're in a world where it's every nation for itself, and then you try and find some to build allies. But let me hit what I think is at the core of the Shah's son's the fact that he's on the scene, and that is the regime change. The question is Israel going to stop at Fordo, or are they going to push for a regime change? This is an issue that our policymakers are struggling with today as well. I want to be cautionary. I mean, I see the wisdom of taking out Fordo one way or the other in the end. I wish it hadn't been with America, but I've made peace with that. Regime change, in my experience over all those years that you refer to, is analysts, political leaders underestimate how people put up with downtrodden conditions to such an extent. And they can't believe that, if you're an American, you'd rise up in arms. So they overestimate the prospects for regime change. And I'm afraid that's where we may be here today. I don't see it. There's a lot of angry people with the Shah, not with the Shah, with the Ayatollah. But there's no armed group inside the country. There's no indication of force. There's no split at the very top where you could have a palace coup. So I think that's the dangerous waters here that we have to avoid.
Jack Devine, thank you so much. His public service with the CIA, the Arkin Group, for decades.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Hugely anticipated this Fed Day. Michael Darda joins us now from Roth Capital. Michael, let me start at the nominal level. It probably won't come up in the press conference, but is the animal spirit there or in risk of lessening? Can we generate, with inflation, 4 or even 5% growth?
Well, Tom, I think we're seeing a little bit of slowing around the edges in terms of the nominal economy. So if we look at some of the tracking estimates for Q2, real final sales to the private sector look like they're sub 2% now. And we've had just over 2 years of 3% average growth. And so nominal has been up there, 5% plus, which is, quite strong relative to the average of the last business cycle that was closer to 4. And then obviously during the high inflation period, 2021, 2022, we had double-digit nominal growth. So the Fed has slowed the nominal economy. It's brought inflation, pretty close to target, but we don't want to go too far and then, worry about recessionary risks, which have been out there. And, obviously the economy has defied those concerns over the course of the last 2 years. But there is some slowing here. And if nominal is about to run sub 4%, Fed policy rate probably shouldn't be above 4.
So What we're not seeing, Michael, at least not yet, is inflation. Is there a scenario where maybe some of these tariffs are maybe taking in the margin of corporate America versus maybe the pocketbooks of consumers?
Yeah, that's really been quite a surprise with these benign inflation figures over the last few months. So part of it could be a little bit of a delay. Part of it is that there's a lot of moving parts here. Even with the recent geopolitically driven upward pressure in energy prices, we're still flattish year over year on crude. Industrial metals are down year over year. Inflation expectations in the TIPS indexed bond market really haven't moved at all. They're at quite low levels consistent with price stability. So we're not seeing a big tariff fallout so far. And that's actually quite good news for the Fed, because I think that gives the FOMC more flexibility to ease policy, in the event that we do see more slowing ahead. But you're right. I mean, the question is, profit margins, right? I mean, equity multiples are not low. So, we could, we're probably not looking at really strong earnings growth this year, but markets are really optimistic over a multi-year horizon that we'll have pretty good earnings growth.
And you're suggesting that'll be a disappointing event, right?
Well, Tom, I'll have to say, I mean, I was quite skeptical of this, whole AI revolution. I thought it was a bit overhyped and overbaked. But I've kind of changed my view on that. And this is just anecdotal, but just through personal use of these AI interfaces, I mean, there has been a vast and breathtaking improvement in what this technology can do. Whether we're dealing with health and wellness from a personal perspective, or your favorite, macroeconomic modeling. I mean, it's like having 50 research assistants at your disposal, and you don't even have to be nice to them.
So what's exactly?
He did that just for me.
Exactly.
Save us, Paul.
Michael, what do you think the Fed should say today? What should Fed Chairman Jay Powell's message be today, do you think?
Well, I would love if the chairman would focus on bond market inflation expectations. I think those are more important than some of the survey data. Is a bit divergent. We've seen a lot of upward pressure from the U of Mich data, but not so much out of the New York Fed. But I really believe these indexed bond spreads are the key. And if we remember back to last summer, when it looked like the labor market was really losing steam in a dramatic fashion, those expectations started to tank, but they recovered when the Fed started to lower policy rates. So the Fed has just nailed it here. I mean, they've really pulled a rabbit out of a hat in terms of raising rates sufficiently, holding them there, and then seemingly, cutting them just at the right time. Even the pause, which some think, was political based on the timing of the election, I think is perfectly justified based on the macro data and the behavior of bond market inflation expectations. So I would love if Fed Chair Powell would give some additional credence there, but I won't be holding my breath for that. I think he's going to hold it close to the vest. We'll see what these updated projections say, but I'd be kind of surprised if the Fed and the market expectations were seriously far apart at this point. I think they're fairly close.
Paul, get one more in here with Michael Darda, but I just went to Google Gemini.
Oh, boy.
And I typed in linear rational expectations model, which Darda was expert at, the difference equations of when he was at Wisconsin, is well. And just like he says, it lays out an incredible 6-paragraph summary, including DSGE models, and we have Clarida today on the Fed meeting. I mean, you're right, Michael. It's jaw-dropping what they're doing.
Michael, do you think this U.S. economy can have? I mean, it appears that we've had that soft landing. The question, I think, for a lot of people is, in a world of higher trade tariffs, does that threaten that soft landing at all? What's your GDP view here?
Yeah, I think we're in a trend growth economy, and that is by definition a soft landing. But at the margin, the risks are probably to the downside here. You guys were just talking about the messy real estate market, and it's been messy for a while. But the risk with these tariffs is that we're self-imposing adverse supply shocks in an economy that has really benefited from an awakening of the supply side, right? I mean, early in the pandemic recovery, we were getting negative productivity growth for about 2 years. Over the last 2 years, we've seen much better numbers, close to or above 2%. And that doesn't really even tell the AI story yet. That was really just a rebound from the pandemic-oriented distortion. So you don't want to do anything that interferes with the supply side, and the tariffs are going to be a headwind there. I think the AI story is going to be much more powerful over the longer term. So as long as the Fed doesn't fall drastically behind the curve here, Paul, that I think that we can have good economic outcomes.
Michael Darda, got to run to the war. Thank you so much on this Fed Day for joining us. Mr. Darda is with Roth Capital.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
This is a joy and hugely anticipated. Winthin is out of the Columbia Georgetown Brandeis axis, and particularly Columbia University. He's global head of market strategy for Brown Brothers Harriman, but he is definitive on the Pacific Rim. Wait, let's just start, Dr. Thin, with the basics of the Pacific Rim, not your Burma, but, North Singapore and on up north. The currencies are screaming. Taiwan dollar, stronger. Sing dollar, almost down. New recent strength as well. It's asymmetric. Is this about dollar weakness, or is this about Pacific Rim success?
First of all, Tom, Paul, Lisa, thanks for having me. It's always a pleasure. I would say there's a lot of moving parts. Much of it, I think, is dollar weakness, but there's also, as you know, there's rumblings out of these trade talks that the U.S. would like these currencies to be allowed to strengthen. We've heard that out of Taiwan. We've heard that out of Korea. It's been reported and denied, but where there's smoke, there's fire. So it fits into the underlying sort of market view that this administration wants a weaker dollar, pretty much across the board, and it's part and parcel of the whole trade talks. That's not to say these countries aren't doing well. Of course they are. There's some issues obviously with China and supply chains and things like that, but overall the fundamental story remains quite solid. So these currencies could strengthen, especially if this dollar weakness picks up after today's what I think will be the expected dovish hold.
So, what do you make of this U.S. dollar? We've seen after the initial sell-off in risk assets earlier this year on Liberation Day, we saw that, the U.S. equity markets kind of retrace all the sell-offs, but we've not seen a rebound in the U.S. dollar. Is just a normal 10% pullback on a rich currency, or is there something else going on?
Well, Paul, if you asked me at the beginning of this year, I was a dollar bullet coming this year. We had sort of the economy firing on all cylinders, the Fed hawkish, et cetera, deregulation. But really, to your point, Liberation Day was really a game changer. It was, I think, a realization by the markets that the policy making out of this administration was unpredictable and really, to me, unexplainable, inexplicable. And I think it's been a loss of confidence in the dollar since then. We've had so much back and forth on tariffs, on fiscal policy. It's really been a sort of game changer since April 2nd and then April 9th, the tariff announcements. So yeah, I've changed. I think the dollar is in for a weaker spell, especially again with the U.S. economy starting to show some cracks. That's why I think the Fed is going to deliver a dovish hold today. Tariff uncertainty continues, fiscal uncertainty continues. So all the elements are there for a weaker dollar.
As the Fed speaks today in the press conference and all, Dr. Thin, one of the things here is everything's unilateral discussion. The president, let's make a deal. Tim O'Brien coming up in a bit, folks. Or maybe bilateral. And all of your academics is it's a multilateral world. Are we just going to see them shift their U.S. exports through Singapore, dare I say, through your Burma? I mean, are they just going to conduit their exports through other geographies?
Well, I do know, that's a good question, Tom. I do know that the U.S. is on alert for China to sort of re-export through Vietnam and sort of other proxies. It can be done, but it'll be difficult. what I think to me is, I get back to this bigger story about the dollar, is that the U.S. is pulling inwards. It's becoming, they call it America first. It's whatever you want to call it. It's isolationist. It's leaving a vacuum for other countries. And I think China will sort of exert its greater influence, especially in the Pacific Rim and Southeast Asia. We have Eurozone becoming a bit more cohesive, and perhaps picking up the ball over in the European sphere. So, it's a long, this, we could talk about this for hours, but in sort of geopolitics, we could be coming into this sort of multipolar world in which the U.S. really has pulled back and allowing others to come into this vacuum. Again, that's part and parcel of the weaker dollar, I think, as well.
Marcus move, the yield comes in 2 basis points, 4.36%. We have economic data and housing starts. There was a bit of a positive revision, but there's a grim statistic on housing starts and building permits here. The survey, negative 0.8%, round it, 1%, negative 1%. It came in at negative 9.8%, round it, negative 10%. Huge miss. Yep. And confirmed with building permits as well, which were to be flat. The survey was 0.0, and they came in negative 2% as well. Claims, pretty much on track as well. 4-week moving average lifts up from 240,000 up to 245,000. So there's the economic data. Maybe it doesn't matter on a Fed day, but it's there. And again, that will be there at 1:30, giving you the Fed press conference and such. Paul?
When we saw earlier in the year, when there was this volatility in the U.S. markets, a movement of capital over to Europe, particularly equities, people kind of buying into these European equities, and now we've got European indices doing better than the U.S. Is that simply a short-term trade, or is that something more fundamental, do you think?
Yeah, Paul, I think that's sort of $1 million question. My gut feeling is it's a pretty serious rotation out of the U.S. Again, everyone was long U.S. equities, dollar at the beginning of this year. But since the year began, we had some good news out of Europe, the fiscal developments in Germany, some improving sentiments indicators out of most of Europe. At the same time that the U.S. is starting to soften up. So I think it's a cyclical shift. I wouldn't say it's a structural. I think that's too early to say, but certainly a cyclical shift, rotation from out of the U.S. into the Europe and other areas. And that's reflected in the equity market outperformance, as well as the currency performance, the weaker dollar. Right now it's sort of sell the dollar, buy everything else.
Dr. Thin,
and again, I don't see anything on this horizon change that very much.
Dr. Thin, thank you so much. Win Thin is with Brown Brothers, Harriman.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Tulsi Guzman joins right now. To say she's with Energy Vista barely describes her expertise on something we don't talk enough about, because Paul and I flunked the physics of LNG, liquefied natural gas. Her research note is so valuable, we protect the copyright of our guest. Get her note from Energy Vista. Leslie, thrilled to have you in here for a brief today. What are they thinking about in Qatar? They're not worried about the World Cup right now. Am I right? They own Arab LNG? Yes. And are they at risk because of this war?
So I think Qatar is one of the most vulnerable player right now in the region, because it depends on the Strait of Hormuz to evacuate all its LNG shipments. That's one. Second, we had a strike from Israel on South Pars, number 14, a few days ago, which is a share field between Qatar and Iran. Although it's the further away from Qatar. Right. And it's a field for domestic consumption within Iran. It shows the capabilities and highest, we are the highest place in terms of tension for potential infrastructure hit in the region.
Ed Morse sat in your chair there 2 days ago, I believe it was, the giant of geopolitics and analysis of this. And he said the media's missing the LNG study, the natural gas study. Brief us now on the fragility and the outcome of a busted LNG market if this war expands.
So Qatar is one of the world's largest LNG exporter around the world. The US is the first one, Qatar is the second one. Qatar is sending most of its gas right now to Asia. 80% of its LNG goes to Asia, 25% to China. So any major disruption of Qatar is a major hit for the market. Less so right now for Europe, because since the Houthi have been relentlessly attacking shipments in the Red Sea, Qatar is, only maybe exporting 1 BCM a month to Europe. But basically the disruptions would be mostly for Asia, and this would be a major hit. I would say that we're in a very soft place right now in terms of demand in the global gas market. There is ample supply coming online, but still, you will notice it with pricing. What I would say is that there are still many unknown in this. In the coming days, the oil and gas market will brace for further impact in terms of shipping disruptions and potential further attacks on energy infrastructure if things escalate.
What are the shipping companies telling you about how they're preparing for, God forbid the Strait of Hormuz, there'd be some tension there, but even other shipping lanes that are critical to the movement of liquefied natural gas and crude oil? What are they telling you?
Yeah. So most of the shipping companies right now are avoiding as much as possible the East Mediterranean, the Suez Gulf, the Red Sea, they were already avoiding it, and the Persian Gulf.
Wow.
Because we've seen some infrastructure hits in the East Mediterranean. The Haifa refinery was hit. Now the Leviathan field in Israel is shut down as precaution. We've seen also, as I was mentioning earlier, some hits on other infrastructure, but I would say that so far we've seen restraint regarding energy infrastructure.
Right.
That could change if things go south.
We're running out of time. This is too important a question. I believe the president was in Qatar. I believe he was shopping a new Air Force One.
Yep.
I guess we're making nice. We're doing the World Cup, whatever the moment is. And Qatar is, I guess, the path of conversation from Tehran to the Western world. What will you listen for from Qatar and from Tehran in that communication to the Western world?
So I see three scenarios right now. One is the US joined the fight and want to finish the job because both, I think the US and Israel understand that since October 7, the head of the octopus is Iran, and a nuclear power in Iran would be too dangerous for the world. Second is the nuclear talks, potentially what Qatar would prefer, meaning we go back to the table, we negotiate, and it would be a save-the-face strategy for Iran, and basically the only option to save the regime maybe now. And third would be total rogue, right, going rogue, and maybe going with nuclear breakout with whatever is left of nuclear, or going after many assets from the US and energy infrastructure and neighbors.
Thank you so much. Really appreciate this. A senior non-resident fellow of the Center for Strategic and International Studies, Leslie Palte Guzman, joins us from Energy Vista.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Paul, can Lisa top what she did yesterday in newspapers?
I don't know. It's pretty solid.
It's like
she's got a good lineup here today. I like the lead story.
You get a pre-email?
Yep.
I don't get a pre-email.
Yeah,
Lisa,
I get approval.
Please, you and Paul brief me on the newspapers.
Okay, we're starting with the Dallas Cowboy cheerleaders. That's why Paul likes it.
Oh, really?
Yes, they got a big pay raise. I like this story. a roughly 400% increase for the 2025 season. It was revealed, episode 7, they have the second season of the Netflix docuseries. They have one about the show. It's called America's Sweethearts. Big hit. I actually watched a few episodes, have to full disclosure. There wasn't any information about what they were making before, how much they're going to be paid under the new deal, but the New York Times did speak to a former cheerleader who said in 2024, it was her 5th year in the squad, she made about $15 an hour, $500 for each game appearance. So sometimes they're saying the mascots make more than the cheerleaders. But what's still missing is health insurance. But what they're saying is that it's really putting it out there. So now, because of this increase, cheerleaders from other teams could be set for an increase.
Is it a part-time job? I mean, there's what, 16 games, 18 games?
Yeah, I don't know. I think they get paid. They get paid by the game, right?
They get paid by the game and per hour, like
and
$15.
per hour.
Oh, it's like a part. I mean, they almost have other jobs.
They all have
right?
full-time jobs, and that's what you see in the series is how they're all struggling. Like they're working this job, working that job, and doing all this stuff just to be a part of the organization.
Were you a cheerleader for the Jets
I
or the Giants?
was not a cheerleader ever.
Next.
Here we go. All right. Since we mentioned that Netflix series, I want to stick with Netflix. And this is interesting. Is it kind of a sign of what's to come? Because Netflix struck a deal with to show linear TV for the first time. It's going to add live television channels, shows from French broadcaster TF1. So what French customers will be able to see is live feeds, including sports from TF1's channels. They'll be able to stream their shows on demand, dramas, reality shows like The Voice that they show.
The actual French signal will be free on Netflix.
Correct. There's no word, though, on how subscription advertising revenues are going to be shared between the two companies or how much Netflix, if they paid for like an upfront fee for their content. But it's kind of a start to something interesting.
And it goes to the news you had earlier a week or so ago that in the month of May, streaming viewership exceeded that of broadcast and cable television in the U.S. So that's the trend. It's right before us.
So would we see that here?
Yes, you will.
Interesting. And the last one is about private space stations. They could become the next travel destination. So instead of going globally to France or wherever you want to go, you can go to space, maybe, pretty soon. There are a lot of companies looking to build these facilities. Making them is pretty expensive. So the Wall Street Journal kind of listed some of them, like Axiom Space's station could someday host as many as 8 people, 5 different modules. You can orbit above the Earth. It's going to cost them about $3 billion, though, to make. And then you have Jeff Bezos' Blue Origin. They're behind a station called Orbital Reef. That could be coming.
Orbital Reef.
Orbital Reef, yes, if you would like to stay. NASA says SpaceX is also investigating using its Starship as a possible low Earth orbit destination, too. And then there's Starlab. They're backed by Voyager Technology. So it's all these companies that are putting the money in.
Is Bezos involved? I mean, they go up. They don't go up to orbit. I mean, excuse me.
Kinda.
Bezos does kinda. It's exactly right. Yeah. But now they're going to go into orbit and on a space station.
And stay. For a vacation.
Well, vacation. Yeah, I can't.
It's a station.
But it's not just tours. Of course, it's also different astronauts and scientists and research and things like that. But it could be open to tourists as well.
Okay.
No, thank you.
I'm just trying
to. Thank you.
I should at least audition for the Giants. Cheerleading this fall.
Yep.
Or the Jets.
Or the Jets.
The Jets do have a good flight squad there.
Let's see. Lisa Mateo, thank you so much. That is the newspapers.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.